I think, first of all the data we've seen over the last 2 weeks has basically been that the consumer is maxed out. We've seen that in credit card loans as well. So I think the consumer is done spending the money. I think we have overestimated what the tax will do to the US story. And on the dollar side, we're seeing a twin deficit of fiscal and current account actually weaken the dollar in an environment where most people talk about a stronger dollar. So I think overall, I think we've been pricing for Goldilocks and we are closer to Frankenstein, to be honest.
And yet, when you look at some isolated numbers, the US durable goods orders, 3.1%, huge beat compared to the expectation, and that was just on the 23rd of this month. And the strong point in that was shipments, particularly indicating that business spending for the first quarter appeared to be picking up. That's encouraging, isn't it? If companies are prepared to go out and start investing in equipment, and particularly transportation-related equipment.
Of course, I mean, we are very dependent long-term on the CapEx expenditure to ramp up. But it's very slow relatively to the amount of focus that's been on the CapEx expenditure. And I think overall the other story is that we have inflation going nowhere. We have, which hurts the top line growth. We have the inability of the Federal Reserve to communicate so that the lending demand goes up. If you look at net lending demand in the US, it's close to zero. And in that environment, you're not going to get growth, which is accelerating. You may get ability to maintain it, but the check that comes through the mail to the consumers in the US is going to be partly spent. That's probably why you see a increase in the spend on durable goods. But at the same time, Q1 started at more than 5% expected GDP. We are now significantly less than 2% for the Q1 expected. So I don't really see things happening in the growth area. We've been at 2% exactly since the financial crisis. I don't think we're going to deviate from that.
I think everyone's been a little bit distracted by trade wars. The data was front and center, I think, as we began the year. Then trade wars cropped up. So investors, if they're saying there's a little bit of uncertainty out there and perhaps you're seeing it in tensions, it's really just down to the trade war. Do you think that's just been a big distraction for a lot of people?
I think it became a catalyst ultimately, but I think it is a combination of what Jeff was referring to. It's the fact we have slower growth, no inflation inputs coming through. The infrastructure spending is not even on the spending bill in the US anymore. So a lot of the factors that strategists go on this program to talk about again and again is actually not materializing. So we have to have a redefinition. But I think in terms of specifically the trade point, I think we have to realize that we are giving away with 30, 40 years of China policy to be more confrontational. And by the way, the 100 billion now on the table supposedly was already on the table in November and December when the Chinese delegation went to the US. So this is a short-term sort of optimizing relatively to give Trump some victory before we go into the midterm election for the Chinese.
One very simple question, I don't know if there's a very simple answer. If you're right and we go from Goldilocks to Frankenstein, what happens to the markets?
It corrects 25-30%, but I think there is in the next
Do we go to that, or is the market just going to be blithely carrying on as it is?
No, I think we are actually so. All of the reports you carried this morning has really been about the fact that the companies has not addressed the fact that we are moving to a new business model, a more fragmented business model, a model where you need to be more data driven, you need to be more, in the case of HMM, they need to be doing more online and the likes. So I think the business is actually behind. They've been so comfortable doing buyback programs and managing the short-term expectations that actually the whole change of the dynamic. And at the same time, you see technology competing with that.